Hello everyone. Now in this video, I'm going to talk about the importance of cash basis of accounting for small businesses, especially when it comes to filing your tax return and following the cash method. So we work with small businesses doing about 500,000 in annual revenue to 6 million or 10 million in annual revenue. So if you're in this revenue range, and especially in your business, if you have a huge receivable meaning where you invoice your customer and you're receiving payment from them in 30 days or 60 days, when you have a payment method terms with the customer and you're receiving your payment late, if you're in that situation, you will normally have a 30-day or 60 days of receivable in your financials in your balance sheet. So in that situation, if you go with an accrual method for filing a tax return, what happens is you might have invoiced, let's say, December 31, 2022, you invoiced your client, let's say, for $50,000, but the invoice is not collectible until end of February. You're not going to receive payment on that until end of February if you follow a 2-month payment term. But if you follow accrual method and file your taxes for year 2022 based on accrual method, what happens is the invoice that you raised for $50,000 on December 31, 2022, but though you haven't collected cash on it, you still have to pay tax on that sale. So even before you collect the $50,000 from the customer, you are required to pay taxes on the $50,000. So let's say, assuming you are in the 35% tax bracket, so you are paying, I'm just taking as an example, assuming it's a straight tax on the $50,000, so you're at least paying $35,000, so 17,500 in taxes right off the bat, where you haven't even collected the money from the customer. So most of the small businesses, we highly recommend following a cash basis of accounting, especially when you file your tax return. With that, what happens is even if you invoice $50,000 on December 31, 2022, you don't have to include that sale in your total revenue for the business when you file your tax return. So you only report the cash collected during the year, so which doesn't include the 50,000 invoice, which is going to be received 2 months later. So that way you are avoiding to pay taxes on the $50,000, which is like 35% tax bracket, is about 17,500. So you're not paying taxes on that before you collect on it. So this happened a lot with clients who came to us new. The past accountants, they didn't really tell them the implications of going with an accrual method when they have large receivables. They ended up paying more in taxes, and in the subsequent years, either they collected in full from the customers maybe within the next year. In some cases, it also happened they did not receive money, it became a bad debt. So it really, for them to see the impact of getting the taxes back, it took 1 year, in some cases even 2 years, to get that taxes you paid in advance back. So that's why, especially as a small business owner, it's highly recommended to go with a cash basis of accounting. That way you're only paying taxes on the money you already collected rather than the money to be collected later. So I hope this was helpful, and for more valuable tips, watch our YouTube channel.